Advisory services offered through VestGen Advisors, LLC, an SEC-registered investment advisor. Securities offered through Private Client Services, LLC, member FINRA and SIPC. Private Client Services and VestGen Advisors, LLC are unaffiliated entities. Any information discussed does not constitute investment advice. VestGen Advisors and Private Client Services do not offer tax or legal advice. People of Chicago, welcome to In the Know Radio with Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. You want help from someone you can trust, someone who knows what it takes to get retired and stay retired. Today, Craig's going to teach you what you need to know. So get ready to learn something that could change your life. Get connected to the show by calling 833-964-PLAN or go to getretiredstayretired.com. And now, here's Craig Bolanos.
Hey, good morning and a very happy Sunday to you. We exist for one purpose. We want to help you start thriving in retirement. I don't want you to survive in retirement. I want you to thrive in retirement. And that means giving you sincere and actionable ideas that you can use to improve the lives of yourself and your loved ones financially. Listen, over the next segments, we've got information that's literally going to empower you. It's information that may even, in fact, allow you to change your life, because when you have the freedom from worry, you're able to live more and pursue everything you've worked your entire life with. So what's the soup du jour? I think it comes back to just looking at those 6 items for 26. We've talked on multiple weekends about the 6 action items for 26. And part number 1 is reminding everybody that we need to be more active amid the uncertainty. And what does it mean to be more active amid the uncertainty? Does that mean people need to start trading their portfolios with more frequency? I think if you're going to be getting retired and staying retired, it's not about trading. It's about investing through retirement. So when I talk about being more active amid the uncertainty, what resonates to me is rebalancing with more frequency and challenging yourself to say, maybe market weight capitalization indices have been all the rage from the spring of 2010 through 25. But now we're seeing this incredible revenge story. It's a revenge of the old economy, a revenge of the industrial, the material, the energy, the utility companies. And you've got to ask yourself, are you missing out? Are you not getting the upside that you deserve because you're still following a pure cap-weighted indice? I think in addition to that, everybody needs to approach their ingredient weight to fixed income. Multi-sector fixed income is the way to handle. I oftentimes refer to the bond market affectionately as 14 flavors, not 31. That's ice cream, 14 flavors. And I think you need to be looking at how you participate there as well. So just know this, as we talk about our 6 action items for 26 in this A block, number 1, be more active amid the uncertainty. And part of that activity is getting you prepared for the midterm volatility that almost always comes in the month of September and October leading up to that first Tuesday in November. So what's part number 2 on the 6 for 26? It's going global. I love America, and so do you. You're listening to a show that's on AM 560, The Answer. You're a patriot as much as I am. It is an American first. That being said, we have to make sure that if we want to win, we're not just looking at American companies today. We have to give a nod to some of the stories that are on the other side of the pond. And that has nothing to do with America not being exceptional. We are exceptional. That has nothing to do with the dollar losing its status as the world's reserve currency. We're not, by the way. We just won't be as dominant as we once were, because de-dollarization is a secular trend. But I just implore you, if you've been riding domestic-only indices, to look at the returns that are being generated overseas and making sure that you too have that global posture in your portfolio, because that global posture is going to help you with something. It's not just going to help you with your nominal return. It's going to help you with your real return. And remember, a real return is what matters. Because at VestGen Wealth Partners, we're here to protect purchasing power. That means you need to be thinking about not just growing your portfolio, but growing it in such a way that you're protecting yourself from currency. And that's where part of that story of going global is very important. If you're just joining us, we're talking about our top six, our six for 2026. And if you want to learn more, I encourage you, you can and you should, go out to our website. That's getretiredstayretired.com. That's getretiredstayretired.com, or give me a call, 833-964-PLAN. That's 833-964-PLAN. So what's next on our list of 6 for 26? After we're more active amid the uncertainty, after we're making sure we're going global, well, number 3 is that quality matters. That's a nice way of saying price matters. But I would argue price has always mattered. And it's for that reason that you need to make sure you're protecting your PE. That's not your private equity. You need to be protecting the price to earnings ratio of your portfolio. And you need to make sure that if you want something that is durable and sustainable, that is tested in the trenches, that you really make sure you have a quality bias in your portfolio. And part of that comes from the concept of investing in cash cows, because you cannot fake free cash flow. Cash cows are very important because when you have significant free cash flow, that means, and what is free cash flow? Well, it's the cash remaining after a company has paid its expenses, its interest, its taxes, its long-term investments. And again, the ability to generate a high free cash flow is a great indication that a company is producing more cash than it needs to run the business. And when a company is paying more cash that needs to run the business, guess what it does with that cash? It invests for growth opportunities. And that's what you want to be doing when you're investing. You want to be investing for growth. So I think high quality, great companies of America with high free cash flow yield, that leads you to this idea of quality because it gives you exposure to opportunities in the market. And a lot of these opportunities, believe it or not, are still trading at a discount to what we perceive to be their long-term intrinsic value. And when you think of long-term capital appreciation, building wealth over time, using free cash flow to measure the sustainability of a company, well, I think it gives you an inside lane to higher returns and better proportionate risk, meaning the upside relative to the downside. If you want to learn more about what it means to cash cow invest, give us a call. 833-964-PLAN. That's 833-964-PLAN. Go out to our website, getretiredstayretired.com. What's number 4 on that list as we're building out? We talked about this theme of quality. Number 4 on the list is making sure that people are paying attention not just to the public market, but pay attention to the private market as well. Why do I say that? I think not everybody, but for the right investors, the right retirees, part of being properly diversified, it's not just your asset allocation mix. It's being diversified through publicly traded assets and privately held assets. So whether that leads you into the discussion of real estate, infrastructure, energy, different forms of investment, you've got to find ways to store value that's not all directly correlated to the S&P 500 and the massive asymmetrical concentration risk that comes in an S&P 500 only investment from those handful of names or at the very top. And I think if you start embracing some level of private investments, riding along a sidecar with your public investments, you're one step closer to achieving financial security. And then in addition to that, you've got to have those cash flow reserve accounts. If you're using an income strategy or what I call the 3 pillars of retirement investment income, the three pillars of retirement investment income, you've got to be using markets while they're at all-time highs. You got to use that as an opportunity to reinvest into those cash flow reserve buckets, because every time the S&P closes at a new record high, especially when it's buoyed by good news like we had recently, like lower inflation data, falling oil prices, that's a great time for you to ring the register and take some profits to put into safety just in case something goes awry, because the world is fragile. We all know it. And rounding out that 6 for 26, if you're just joining, we've been talking about our 6 action items for your investment portfolio in 26 with your friends, Craig Bolanos at VestGen Wealth Partners. Number 6 on my list is that returns are going to come back down to earth. Now, why would returns come back down to earth? That doesn't mean I'm calling for markets to lose money. I'm just calling for markets to grow slower from here on out. And why would that be? Well, we've got a Federal Reserve, maybe we'll talk about it later, that's going to be a little bit more humble, a little bit more quiet, a Federal Reserve that's not going to be the crutch for the stock market that it once was. Maybe beyond that, it's the fact that we're no longer doing all of this stimulus like the CARES Act, the American Rescue Plan, the infrastructure bill, balance sheet transactions. Maybe it's a little bit of this and maybe a little bit of that. But if returns are going to start normalizing, reversion to the mean, going back to normal, you need to make sure that your retirement plan, your income plan is tested to handle what could be a lower return experience the next couple of years than what we've had in the past. So I want you to connect with us to get that plan. 833-964-PLAN. That's 833-964-PLAN. Go out to our website and get retired. StayRetired.com. You're listening to Craig Bolanos, in the know with VestGen Wealth Partners, AM 560, The Answer.
You want more in the know radio? You want more in the know radio? You can't handle more in the know radio. Okay, yeah, you can. And it's on AM 560, The Answer. Welcome back. Here's more with Craig.
Hey, every week I come to you with one simple goal. I want to simplify investing, retirement planning, so you too can make better financial decisions. But those are decisions that are data driven, based on facts, not decisions based on sentiment, aka emotions. And I want to discuss again a concept I've really been hammering in the last couple of months that I think can dramatically change the way you think about your investing. And it's called real return investing. And real return investing, that might sound a bit like Wall Street jargon, but I promise you, it's got to be one of the simplest and most important concepts everyone should have to seek to understand. You know, the way I think about it is there's an illusion to higher returns. Well, wait a second. That sounds crazy. An illusion to higher returns? I mean, if your investment earned 8% last year, was that actually an 8% gain? Well, of course, everyone's going to say 8 is 8. But what if inflation was 5? Suddenly your purchasing power has decreased. Makes sense? And what if you paid taxes along the way? You know, the real increase in your wealth might actually be less. And here's the point. Listen up. Yes, listen. You don't retire on percentages. You retire on what money can actually buy. I say it again. You don't retire on percentages. You retire on what money can actually buy. Food, healthcare, travel, grandkids, golf, new car, comfortable lifestyle. You know, and that's why professional investors focus less on headline returns and we focus more on real life, real returns. So defining real return, you know, for us, it's your investment return, less inflation, less income taxes. And what's left is what's actually improving your standard of living. I mean, think about it this way. If your paycheck doubles, but everything else you buy also doubles, you're not any richer. The same thing happens with investments. You can celebrate a great nominal return without asking the question that really matters. Did my purchasing power actually increase? That should be everyone's scorecard when it comes to staying retired. Did my purchasing power actually increase? That's the scorecard. Because remember, inflation's the silent killer. Inflation doesn't usually make the headlines until it's high, but even nominal inflation can severely creep in. every day and quietly erode your lifestyle. I mean, something costing $100 today costs like 180 20 years later, and that's at a very soft, benign 3% inflation rate. I mean, how many people here live in Cook County if you're listening right now? Has your property taxes doubled in the last 15 to 20 years? Yeah, probably has. Well, has your income doubled in the last 15 to 20 years? I don't know. Maybe yes, maybe no. So, retirement isn't just about replacing income. It's about maintaining your purchasing power for decades. And listen, you might be retired for 25 to 35 years. It's not unheard of. And that's a long time to outrun the silent killer, which again is inflation. So that's why simply chasing yield, putting everything into cash isn't the answer. Cash feels safe. Likewise, you can't just blindly throw everything into stocks. You can't. You got to do something different, right? And remember, there's a big difference between investing and speculating. If you're just joining, we're talking about real return investing, one of the most important thematics I've been driving home this entire year, especially in the last couple of months. And remember, there's a big difference between investing and speculating, right? Once you're on the cusp of or already retired, you're as concerned about the return of your money as you are about the return on your money. That's a simple fact. And when we blend this together, a safe strategy with real return investing, we're focusing on a number of principles. First, it's diversification, because diversified investments are going to respond differently to changing economic environments. I would argue it's not just about owning different things. I should really say it's not diversification. It's something called correlation. The correlation between how different securities, different assets, different ingredient weights really trade. And second, when we're talking about real return, what are we focusing on besides that correlation? It's that taxes matter, because taxes have always mattered. And TIR, taxes in retirement in particular, they matter. And third, costs matter. You got to look under the hood and see what you own. And fourth, discipline. Discipline matters. Markets are always going to have corrections. That's fine. But you need to work with people, professionals, who are going to be more active amid the uncertainty to take advantage of those corrections. And finally, it's all about goals. Investing isn't about beating your neighbor. Investing is about achieving your family's goals. Yours, your family. See, you need something that's custom tailored to you, something that reflects the nuance of your tax picture, the nuance of your monthly income picture, the nuance of your estate plan. And I think that's why people just need to start having a different way to measure success. If you're just joining us, we're talking about real return investing, because VestGen Wealth Partners is here to protect your purchasing power. Other people are focused on nominal returns. We're focused on what really matters, your ability to spend and keep current and protect choice in retirement. And that's why I think there needs to be a different way to measure success. I mean, think about two investors. Investor A earns 12% one year, then loses 20% the next. Investor B earns a consistent 7% with less volatility. Who's going to be more successful? Most people think, choose the 12%. But over time, no. See, consistency wins. Consistency wins because large losses require even larger gains just to recover. And real return investing emphasizes preserving purchasing power while you participate in that long-term growth. It's not flashy, it's not exciting, but neither is watching your retirement plan succeed year after year. You know what? I want to win quietly. So what do I ask you to do? I want you to think about your own investments this week. I want you to ask yourself a simple question. Am I chasing returns, or am I building lasting purchasing power? Am I chasing returns, or am I building lasting purchasing power? Those aren't always the same thing. I mean, at VestGen Wealth Partners, we help people develop investment strategies designed to grow wealth responsibly while keeping the inflation, the taxes, the risk in check with the focus on those long-term goals. And I want you to take advantage of a complimentary second opinion. I want you to allow us to maybe discuss with you what your worries are. Let's talk about what some of the headwinds are that we all face. Let's speak truth to those headwinds. And then let's discuss what the methodologies are that we can use to cure that. Go out to our website. That's getretiredstayretired.com. That's getretiredstayretired.com. And when you go out to that website, I encourage you to download any of our free publications. We have right there on that website, getretiredstayretired.com, a publication on real return investing. So you too can get educated on how it is we're doing this and making things happen. 833-964-PLAN. That's 833-964-PLAN. Go out to our website at getretiredstayretired.com and download our free publication on real return investing today. And a part of real return investing is you got to start evolving the portfolio beyond stocks and bonds. Stocks and bonds are only going to get you so far. There's a reason that precious metals exist in the world. There's a reason that commodities exist in this world. There is a reason that currency, what you call Forex, exists in this world. And I could argue there's a reason why digital currency can, does, still, and will continue to exist in this world. And you need portfolio solutions that are going beyond just stocks and bonds. You need the solutions that are going to give you that currency exposure, the commodity exposure, the precious metal exposure, all of these exposures in a very thoughtful and intentional way so you too can keep the promise of living more, which comes from worrying less, which is facilitated through protecting your purchasing power via your friends at VestGen Wealth Partners. Listen, I lead a team, and it's a team of highly decorated, highly qualified advisors, each with their own specialists. It's a multidisciplinary firm. You deserve to work with your fiduciary investment advisor. You deserve to work with your financial planner. You deserve to work with the team who helps you model your cash flow, manage your retiree health care, plan for continuity of care, and wrap all of those things inclusive of the income taxes and the estate planning in one spot. Go out to our website, getretiredstayretired.com. That's getretiredstayretired.com. Take advantage of downloading that free real return investing guide so you too can start protecting your purchasing power. And if you want to connect, we want to get with you. That's 833-964-PLAN, 833-964-PLAN. You're listening to Craig Bolanos, In the Know, AM 560, The Answer.
Would you like a dose of knowledge? Good, because Craig is back and about to fill your retirement prescription. Back to In the Know Radio on AM 560. The Answer.
You know, every week we talk about investments, retirement income, market volatility, taxes, and everything that goes in between because we want you to retire with confidence. But this topic, this is something you don't necessarily hear from Wall Street. I'm not talking about interest rates. I'm not talking about inflation. We're talking about the thing that can quietly cost you hundreds of thousands of dollars unnecessarily in retirement. Oh yeah, it's taxes. I mean, listen, many people spend decades worrying about market crashes while completely overlooking what may become their largest lifetime expense. It's the IRS. Now, before you reach for the dial, stay with me for a second. It's not going to be a dry discussion about the tax code. This is about protecting your savings. It's about making smarter decisions. It's about understanding why two retirees with exactly the same amount of money can end up living very different financial lives simply because one had a tax strategy and one didn't. So get a cup of coffee, Let's talk about what people refer to as the retirement tax bomb and how you can start moving forward. So rewind the clock. You think back 30 or 40 years. What advice did everyone give you? Max out your 401k, contribute to your traditional IRA, take the deduction. You're going to be in a lower tax bracket when you retire than when you are working. And for millions of Americans, I think that advice made perfect sense. Frankly, maybe it still can. The problem isn't that your tax-sheltered, tax-deferred retirement accounts are bad. The problem is, for a lot of families, it's become their only strategy. Pensions are gone, guys. They're gone. People have spent the last 40 years stuffing money into tax-deferred accounts. The balances have grown. The markets have cooperated. Everything looks great on paper. Then retirement arrives, and suddenly you discover that you don't own every dollar. The IRS owns a part of all of your nest egg. Yeah, who really owns your nest egg? If you have $1 million nest egg, how much of it belongs to you? Most people are going to smile and say, well, the whole $1 million does. My argument would be no, not necessarily. Because if future tax rates average, say, 30%, that's not unthinkable at all. Then roughly $300,000 of that $1 million belongs to the IRS. The government, simply, they haven't chosen to collect on it yet. Think about that. What if you bought a house with a silent partner who owns 30% of the house? And that silent partner never sends you a bill until the day you start selling rooms out of that house. That's like one way to think about how the retirement account works. That's one of the reasons I can say a retirement tax time bomb is lurking out there. Because what we've done through all of our 401ks, all of our traditional IRAs, is we've delayed the recognition of taxes. We haven't eliminated them. If you're just joining, you're listening to Craig Bolanos, In the Know, VestGen Wealth Partners, 833-964-PLAN. That's 833-964-PLAN. Go out to our website at getretiredstayretired.com. That's getretiredstayretired.com. You know what the biggest assumption in retirement planning is? The biggest assumption is that you're going to be in a lower tax bracket when you retire. And yeah, it's sometimes true, but interestingly, oftentimes it isn't. Because today, retirees have multiple streams of income. Social Security, RMDs, investment income, rental properties, part-time consulting, you name it. And what many people discover is that they haven't gone into a lower bracket at all. There's some people that have definitively gone higher. And when you zoom out, listen, you already know that America's accumulated massive national debts. Massive national debts. You know the Medicare spending is getting out of control. You know that Social Security faces its breakdown in 2032. You know that big government is still large. It's not shrinking. And I oftentimes ask people in the conference room a simple question. Do you think taxes are more likely to be dramatically lower 20 years from now or higher? And what everybody says, without hesitation, is they're probably going to be higher. So wouldn't it make sense to intentionally pay some taxes now while rates remain relatively attractive? Not because we know the future, but because we want to future-proof our future, right? And that's where things get expensive. You've done this wonderful job savings as we talk about this retirement tax time bomb. Maybe you accumulated not $1 million, you got $2 in your traditional accounts. And now the IRS starts requiring you to take withdrawals. And whether you need the income or not from your retirement accounts, they force you to take it. And that makes more of your Social Security subject to income taxation. That makes you increase what you're paying for Medicare Part B, Medicare Part D. Thank you, income-related monthly Medicare adjustment amounts. I would argue it affects your estate planning. And more importantly, it will totally hose your surviving spouse, who very oftentimes catapults from the 12% bracket when you were joint to 22, or catapults from the 24% tax bracket to the 32% tax bracket just because we're going from a joint filer to a single. Oh, don't believe me? Oh, yeah. There are two massive pain points in marginal tax brackets where we have a 10-point jump from 12% to 22 and an 8-point jump from 24 to 32. So part of this discussion I'm having about the retirement tax time bomb isn't just for us, it's for the people that you love. And what I want you to think about is having these, distinct buckets. I want you to have a bucket that's tax deferred. Your regular IRAs, 401ks, 403bs. There's nothing wrong with that. That's all the money that's grown that you've never paid taxes on. But I got to have you have bucket number 2. I want those taxable accounts, those trust accounts, those joint accounts, those brokerage accounts. I want the benefit of dividends and capital gains and low tax rates. But you got to have bucket number 3. You got to have bucket number 3. Bucket number 3 is our tax-free bucket. That is the home of your Roth IRAs. That is the home of your health savings account. That is the home of maybe a specially curated insurance strategy. But you got to have a bucket of tax-free money. Because let's be sincere. I would love to eliminate everyone's future taxes, but that's just not going to happen. But you know what we can do? We can create tremendous preparedness and flexibility. And here's what I think about. Who's showing you how to get there? Who's helping you honestly diffuse the tax time bomb? Who's honestly sharing with you the cutting-edge techniques and tools that you can be using to improve a defined outcome for you, your loved ones, like a surviving spouse? And what do we do differently? And when families come into our office, we're not just talking about investing. We're not just talking about where dollars are located. We're talking about what's important about money to you. How has that changed from where you were in the past to where you are today? What is it that we want to seek improvement on? Because winning is all about the margins. And let me be clear about something. We never let the tax tail wag the dog. Let me be clear again. We don't let the tax tail wag the dog because everyone's got a different answer on what to do. But I give you this invitation. If today's conversation about diffusing the retirement tax time bomb is intriguing to you, and you wonder what your future tax bill is going to look like, you're not alone. In fact, that's why we've created what I call the retirement tax stress test. The retirement tax stress test. And during a complimentary consultation, we'll help answer questions like, how much of your actual retirement savings belongs to you? And what would your future RMDs look like? And how could money moving into the tax-free safety zone benefit you, not just in concept, but in real life? And that's what I want you to do. 833-964-PLAN. That's 833-964-PLAN. Go out to our website at getretiredstayretired.com. That's getretiredstayretired.com. Download our Real Return Investing Guide. Plug in to all of the media appearances as you see me on this radio, television, and other circuits so you too can get a feel for what we do, because what we're doing is helping everybody thrive, not survive in retirement. And that website again, getretiredstayretired.com. That's getretiredstayretired.com.
It's more In the Know Radio with Craig Bolanos on AM 560 The Answer, where his goal is to pummel you with financial know-how until you say uncle.
The next great investment opportunity is something you probably don't own. Yeah, let me say that again. I think the next great investment opportunity is something you probably don't own. So what is it that people are missing out on? Even though some of the world's largest pension funds, university endowments, and sovereign wealth funds have been investing in it for decades. Well, it's private infrastructure. Yeah, private infrastructure. This might just be one of the most exciting long-term investment themes of the next 20 years. Private infrastructure. Think about everything you rely on every single day. Electricity, cell phone towers, fiber optic networks, data centers, natty gas pipelines, water systems, shipping terminals. Thank you, Amazon. Listen, these are all necessities. Whether the economy's booming or struggling, people still need electricity, internet, transportation, water. And that's exactly why institutions have poured hundreds of billions of dollars into infrastructure, what I refer to as infra. I mean, listen, firms like KKR, Blackstone, they have huge infrastructure portfolios. And I think what most investors don't realize is the biggest investment story today isn't just artificial intelligence. It's not just the stock market. It's what AI, electrification, digitalization, and energy demand are forcing us to build. I mean, every time you search ChatGPT, every Netflix movie, every Zoom session, every cloud backup, every AI request requires massive amounts of electricity, data storage, and fiber connectivity. And those facilities don't magically disappear. Someone's got to finance them. Someone's got to build them. Someone's got to own them. And increasingly, private investors are doing that work. I mean, I think we're entering a multi-decade investment cycle driven by digital infrastructure, power generation, and electrification, and energy security. And governments alone, they don't have enough capital to fund everything that's needed. So how does this help your retirement portfolio? Most people just own stocks. Most people just own bonds. Some people own real estate, but very few directly invest in infrastructure. And infrastructure has got some good characteristics that I think you might find attractive. First, infrastructure businesses generate predictable cash flows because they're supported by long-term contracts. It's regulated revenue. Think about a toll road. People driving on it every day. Or a utility company who delivers electricity. Think about a fiber network company connecting businesses. Revenue tends to be more predictable, I would say, than many traditional businesses. We're talking about infrastructure today, infrastructure investing. The best investment that's currently not in your portfolio. Second, infrastructure has demonstrated lower correlations. Like we talked about in our C block today, you got to have lower correlations to traditional stock markets. Now, that doesn't mean it doesn't move up or down in value. Yeah, it's going to move up and down in value, but it's not going to move up and down in value in lockstep with the S&P. And diversification matters. Correlations matter because we don't want every investment heading the same way at the same time. And third, many of these infrastructure assets possess great inflation-sensitive characteristics. If prices rise, many of these contracts for infrastructure, regulated pricing structures, allow them to adjust their price upwards over time, which helps us do what? What we talked about in our B block, protecting purchasing power. See, we're back to that again. So infrastructure today looks so much different than it did 20 years ago. 20 years ago, infrastructure to us was what? Bridges, highways. Now infrastructure, hyperscaler data centers, hyperscale data centers, fiber optic broadband, telecoms, battery storage, power transmission, natty gas infrastructure, everything that supports the verticals of AI. That's where much of tomorrow's economy is going to grow. And as technology continues to advance, the demand for power, connectivity, and digital capacity is accelerating. And here's another great stat. Industry research estimates the world faces an infrastructure investment gap measured in the trillions of dollars over the coming decades. That's so much money. That was trillions with a T, by the way, that governments aren't going to be able to financing on its own. So what does this mean? Should you be rushing out, calling me, and putting all your money into private infrastructure? No, because every investment carries risk. Infrastructure investments could be a little less liquid. Private infrastructure investments might require a longer holding period. Values, because it's a longer holding period, aren't going to be marked to the market every single day. These are the types of strategies that are designed for patient investors who love investing in cash cows. See, again, infrastructure, tremendous free cash flow. And that's why these investments in infrastructure are designed to complement your existing investment portfolio. And at our firm, we spend an enormous amount of time studying how institutional capital allocates their assets. Why? Because here's the reality. The ultra wealthy, they don't build portfolios using only stocks and bonds. They diversify. That's private equity, private credit, infrastructure, real estate investment, alternative investments. These are the asset classes that have long been available primarily to large institutions. But over the last several years, access in the right wrappers has been democratized. And I think there's a big lesson here. Investment opportunities evolve. 30 years ago, too many people overlooked technology. 20 years ago, everyone overlooked how important cloud computing was. 10 years ago, AI, artificial intelligence, barely entered everyday conversations. And today, infrastructure sits at the center of many of those same transformational needs. Power, connectivity, energy, digital networks, they're the building blocks of tomorrow. I want you to learn more. You can and you should. Go out to my website, getretiredstayretired.com. That's getretiredstayretired.com. Give me a call at 833-964-PLAN, 833-964-PLAN. Ask yourself this. Is your portfolio reflecting where the economy has been, or does your portfolio reflect where the economy is likely going? Yeah, because that's a very different conversation, isn't it? So we help people think not just about chasing returns. Instead, we focus on building with intent for the future to future-proof. And understanding how future-proofing allows you to worry less and live more. And I think you got to learn, you got to want to know more about how institutional investors are using private infrastructure and how we too can roll that out for qualifying clients at VestGen Wealth Partners. And we'd love to have that conversation with you. We're advisors who have the hearts of teachers. We know what it means to always put you, the client, first. The client is at the center of everything that it is that we do. We exist in a role of service, in a role of education, in a role of creating a multidiscipline experience, one that is, dare I say, more holistic, where you can access all of these seamless integrated services under one roof. And private infrastructure investing is just that. I really think it is. Don't overlook how people overlook tech. Don't overlook how people overlook cloud computing. Don't overlook what people did with, artificial intelligence. And don't overlook what I'm talking about here on a Sunday morning. Don't overlook infrastructure, because infrastructure today sits at the center of these transformational trends. And how can you invest in power and connectivity, energy, data centers, digital networks? How can you invest in the building blocks of tomorrow's economy? Well, for the right people, we know how to get you there. I'm Craig Bolanos. I lead a team of seasoned multidisciplinary professionals who stand ready to help you too get retired and stay retired, so you too can start thriving, not just surviving in retirement. Connect with me online, getretiredstayretired.com. That's getretiredstayretired.com, 833-964-PLAN. This is Craig Bolanos, VestGen Wealth Partners, your favorite show, In the Know with VestGen Wealth Partners on AM 560. The Answer.
Okay, Windy City, get ready to be blown away with a hefty gust of financial know-how. You're listening to In the Know Radio with Craig Bolanos on AM 560. The Answer.
Well, hey, I hope you found today's conversation valuable, because retirement's not about finding the next hot stock or buying some annuity. It's about building a financial plan, one that allows you to retire well. And throughout today's program, we talked about what I believe are the biggest action items. Protecting your purchasing power, because inflation might not dominate the headlines every single day anymore. Again, the data is coming down year over year, but it's quietly eroding your standard of living. And that's why we believe portfolio construction has to have those investments that focus on real return investing, because at VestGen Wealth Partners, we're here to protect your purchasing power. And remember, you got to create the dependable income. Retirement, again, is not about chasing returns. It's about cash flow. And that's why cash cow investing, that philosophy, building portfolios that generate consistent rising income, free cash flow, it's core to the DNA. And you got to look beyond the traditional stocks and bonds. I mean, some of the world's largest pension funds, endowments, institutions, they're allocating significant capital to the investment that's not in your portfolio currently. It's called private infrastructure. Energy systems, data centers, utilities, communication networks. I mean, these all offer attractive income, inflation sensitivity, and lower correlations that traditional portfolios might leave out. And don't forget about the taxes. I mean, one of the biggest risks facing retirees isn't market volatility, it's taxes. I mean, that retirement tax time bomb, it's real. It's very real. So let us help you get tax diversified. And you got to have a written income and distribution strategy. It's not just about accumulating assets. It's about the coordination of care. That's where that written income and distribution strategy comes from. So make sure everything that you do supports your end goal. Don't just have a collection of accounts. Have a coordinated strategy. Have every dollar have purpose. And give us a call today at 833-964-PLAN. 833-964-PLAN. Go out to that website at getretiredstayretired.com. We'll sit down, discuss your portfolio, identify potential tax traps, evaluate your income plan, and determine whether you're positioned to protect your purchasing power through retirement. I mean, this is just an opportunity for you to receive a second opinion that will make a meaningful difference in your financial future. So remember, retirement, it's about winning. It's about winning on your terms. And a big part of that win is diffusing taxes, protecting purchasing power, so you too can worry less